Hi, welcome back. If as you listen to this session, you get a sense of deja vu, I won't blame you because I've done this before. In fact, every year ahead of teaching my classes at NYU Stern, I invite people to join me on my journey. So starting late January 2023, I will be back to teaching. I'll be teaching 2 classes, the MBAs, a corporate finance class and a valuation class, and 1 to the undergraduates. Now, to be actually physically in the classroom, you have to be an NYU Stern student. But even if you're not, hopefully during the course of the session, you will find a way to join me in my classes and perhaps complete them with everybody else in the class. So before I describe the classes I teach, I want to talk a little bit about why I teach. Because for some reason, people seem to be fascinated that I teach rather than work as an equity research analyst or at a hedge fund. I have heard the old saying that those who can do and those who cannot teach, and I'm not going to get defensive about it. You're welcome to believe whatever you want. I'd like to believe that I can both do and teach. Now, you have to obviously make that judgment for yourself after you watch my classes. But if you ask me why I teach, it's very simple. I love teaching. Teaching to me is a passion. It's not a profession. And there's nothing else in the world I'd rather do. In fact, when I teach, I'm driven by a teaching philosophy that has 6 components to it. The first is that preparation is key. You cannot teach without being prepared. The old Edison saying of 90% perspiration, 10% inspiration applies to teaching. The second is you have to respect your students. If you look down on them, if you believe that they cannot or will not learn, then they will live up to that expectation. The third is you need to be fair, not just being fair, but be perceived to be fair, because there's nothing more toxic than a classroom that's perceived as unfair. Fourth, have some empathy. I tried to remember when I was a student, and I tried to avoid doing all the things that pissed me off as a student. Fifth, teaching doesn't end in the classroom. It extends into office hours, your interactions with students, and increasingly that interaction is online, emails, videos, Zoom calls. And I try to remember that whenever I feel impatient answering a question either in person or on email. And finally, you need to have fun. Learning is fun. Look at a 2-year-old and look at how much joy they get from learning. Somehow school systems seem to be designed to knocking that out of us, but hopefully you can rediscover it. And I think teaching is fun, and I hope it's contagious. So with that lead in, let's talk about the classes you can take. Now I teach, as I said, 2 big classes, corporate finance and valuation. And when people walk into my class, there are 3 skill sets I would like them to have. The first is I need them to be able to understand basic accounting. I'm not an accountant, but much of the raw data that we need comes from accounting. The second is I need them to understand at least the basics of finance, present value, what a bond is as opposed to a stock, how markets work. The third is I need them to be able to be comfortable working with data. In other words, some statistics. Now, I used to be okay when people said I've taken classes in those, but increasingly, and this may just be my cynical side, I've discovered that it's better to actually create my own versions of these classes. So think of this as pre-game prep. None of the 3 classes I'm going to describe next are classes that stand on their own, but they're classes designed to prepare you for my corporate finance, valuation, and investment philosophies classes. The first is a class on accounting. I'm not an accountant. I've never wanted to be an accountant. But as I said, you need to be able to read accounting statements to be able to do valuation or corporate finance. So this is a class that's more financial statement analysis than accounting, but it gives you a valuation perspective on financial statements. In other words, I have no qualms about pointing out things that I think accountants do wrong, right? Treating leases like as operating expenses, as they did until 2019, or R&D as operating expenses, which they still do. So this is a class built around the 3 big accounting statements, the income statement, the balance sheet, and the statement of cash flows, and how they can be used to get information about a company. If your accounting is strong, skip this class. If your accounting is shaky, then you might find this class useful. It's a 12-session class. It'll take you about 2.5 to 3 hours. In fact, these 3 prep classes are all about 12 sessions and 2.5 to 3 hours. And I think they're worth taking if you're shaky. The second is basic finance. What is basic finance? I introduced two structures that I use increasingly through my regular classes. One is the notion of a financial balance sheet as opposed to an accounting balance sheet. We look at things, look at a company through the perspective of finance, looking forward as opposed to backward. The second is a corporate life cycle. As those of you who've followed me for a while know, I believe that companies go through a life cycle. They're born, they mature, they decline, and they die. And I think this life cycle is very useful in explaining why companies do what they do. So in the foundations class, I cover the basics. What are cash flows? How do you measure risk? What is the time value of money? I also do a very basic introduction to valuation. How do you value an asset with contractual cash flows? In other words, a bond. How do you value residual cash flows, which is what equity, or contingent cash flows and option pricing? And finally, I'm not a big macro person, but I cover three macro variables that I find myself running into over and over again in my valuation and corporate finance classes. One, of course, is inflation, how it plays out in valuation and corporate finance. The second is interest rates, and the third is exchange rates. Again, don't expect deep insights into any of these. Essentially, you're learning enough about interest rates, inflation, and exchange rates so you can do corporate finance and valuation. Again, if your foundations are strong, skip the class. If they're weak, it might be worth taking. Finally, statistics. We live in a world of big data. We're drowning in too much data. Statistics is the discipline designed to help you deal with data. So I basically talk about how we collect data, how we describe data, what are the data descriptives, how data distributions, either in the form of histograms or standardized distributions, can help us, and how you look for relationships in data, correlations, covariances, regressions, and how you can use regressions for predictions. And finally, a very short introduction to probabilities and tools that you can use in probability: Monte Carlo simulation, probits, decision trees. So again, if your statistics is solid, you can skip the class. If it's weak, might be worth trying again. 12 sessions, 2.5 to 3 hours. So think of this as prep work for my 3 regular classes. The first of these classes, and the one class that I think every person should take, is a corporate finance class. What is a corporate finance class? It covers the first principles on how to run a business. Let me repeat that again. It covers the first principles on how to run a business. So this is not a class for bankers and consultants. It's a class for business owners and entrepreneurs that, of course, bankers and consultants will benefit from taking. But it's a class designed for people who want to run businesses. It starts by defining the end game in a business. What are you trying to do in a business? And breaks down every decision in a business into 1 or 3 groups: investment decisions, financing decisions, and dividend decisions, and lays out the sub-principles that govern how we should think about how do we take projects, how do we decide what hurdle rate to demand on projects, what's the right mix of debt and equity for a business, and what's the right kind of debt, and how much should companies return. If you ask me to describe my corporate finance class, it's a big picture class where I constantly pull people back from the specifics, the details, and the models to see why we do things the way we do. And it's an applied class. Everything in this class is applied on real companies in real time. I use 6 companies ranging from, Disney, large multinational entertainment company, to Vale and Tata Motors, emerging market companies in very different businesses. Vale is an iron ore mining company, or a mining company in general. Tata Motors is a family group company in automobiles. But I also look at Baidu, Chinese technology company, and Deutsche Bank, a European bank with a long and storied tradition. And finally, a small privately owned bookstore in New York City. My objective is to show that you can apply corporate finance in pretty much any type of company. So that's the one class that I think everybody should take, but that's my biased view. My second, and as I go through that corporate finance class, I talk about how the emphasis in corporate finance shifts as companies age. Early in the life cycle, young companies, the focus is almost entirely in the investment decision. Why? They really can't afford to have debt, and they shouldn't be returning cash to owners anyway, which is what the dividend decision is. As companies mature, the focus shifts to the financing decision. It's the right mix of debt and equity. Can I lower my hurdle rate by using a different mix? And as companies go into decline, the focus shifts to how do we return cash to owners, the dividend decision. So if you tell me where a company is in the life cycle, I can tell you what part of corporate finance matters most to that company. So that's a corporate finance class. My second class is a valuation class. What does it cover? Most people coming into this class expect us to cover valuing large publicly traded companies, and we do. But we're not going to stop there. In fact, this class is not just about intrinsic valuation. We talk about discounted cash flow models. It's also about pricing, where we use multiples and comparables and peer groups, and how there are some assets that can only be priced. A Picasso cannot be valued, can only be priced. So we're going to talk about valuation, we're going to talk about pricing, and how option pricing can help us in certain kinds of companies. If you ask me to describe this class, it's about to value or price just about anything, from Bitcoin all the way to Facebook. Now, again, as with the corporate finance class, I'll talk about the challenges in valuation shifting as companies move through the life cycle. Early in the life cycle, you don't have much historical data. The company might be money losing, still its business model is still in formation. You've got to be a storyteller to value companies. So you're going to find us spending a lot of time on storytelling in the valuation class. As companies mature, you can be more mechanical. Mechanical in what sense? You can take historical data and just forecast things out. And then you go into decline again, you're going to find that traditional rigid valuation models tend to break down. So we're going to talk about companies across the life cycle. Which brings me to my third and final class, which is my investment philosophies class. My investment philosophies class was born out of two observations. The first was that very few people beat the market. So if you think across the decades, how few people have been able to consistently beat markets, the numbers are small. The second is, if you look at those people who beat the market, they don't all fall into the same bucket. They don't do things the same way. They don't have the same beliefs about markets, the same investment philosophies. The one thing they do have is each of them has an investment philosophy that fits them. Using those two observations, I designed a class where my objective was not to thrust the best investment philosophy down your throats, because there's no such thing. It's to give you a menu of investment philosophies, ranging from charting to fundamental analysis, from growth to value investing, from trading to investing, from market timing to stock picking, and essentially talk about each philosophy with as open a mind as I can keep, and also talk about what personal characteristics you need for that philosophy to work for you. And my objective in this class is for you to find a philosophy that best fits you. Corporate finance, valuation, investment philosophies. Now, as you approach taking these classes, you're also going to see with my investment philosophies class that what part of the life cycle you're going to end up with in the investment philosophies class will depend on what philosophy you have. If your investment philosophy is built on the presumption that markets make mistakes on investments that companies have already made, assets in place, you're going to find a lot of mature companies in your portfolio. If your belief about markets is they tend to make mistakes on the growth part of value, you're going to find a lot of growth companies. So where you end up in the life cycle will depend a great deal upon what kind of investment philosophy you have. Now, as you think about taking these classes, I understand that you face time constraint. You've got lives to live, families to look after. So I offer these classes in multiple formats. Not all of the classes are offered in every format. But if you look at my corporate finance and valuation classes, as I said, I offer them as regular classes at Stern. What does that mean? Starting late January, we're going to meet every Monday and Wednesday, twice a week, for 75 to 80 minutes. That's what the session is. And the class lasts 15 weeks. We end in May, we take our exams, and the class is over. So you can take my regular classes with the caveat that these classes will have 2 80-minute sessions a week. Now you can take them in real time. The Spring 2023 class will start in late January, and I've given you the link for that class. But if you want the archived version of this class from Spring of 2022, you're welcome to take it as well. Incidentally, if you decide to take my regular classes, you can stay in real time with the class and try to be done in May. But you have the luxury of stretching it out and taking it out over 2 or 3 years if you want, if that's your objective. Now, so that's my first choice. What's the downside of this choice? Watching 2 80-minute sessions. 80-minute sessions are tough to watch online. This is designed for a regular classroom. For some people, it might be too much. Now, so what do I do then? I offer online versions of all 6 of my classes, including the 3 prep classes. These are the online versions. What I do is I take my regular classes that run 80 minutes and I try to compress them into 12 to 15 minutes. It's a testimonial to how much bloat there is in MBA program that compressing an 80-minute class to 15 minutes is not that difficult to do. So essentially you get 90% of the content that you get in a regular class in the online classes in far less time. So the online classes, you can take them on your own timing and they're much shorter sessions. What's the downside? Well, these online classes were not recorded in 2022 or will not be recorded in 2023. They might have been recorded in 2017 or 2015 or 2019. So they're going to be dated, and at some point in time I will update these classes, but I will not update them every year like I do my regular classes. There's a third form, and the other downside is if you do take either the regular or the online classes, you will not get any credit for the classes. You will not get any certification. But the good news is they're both free. You're saying, what if I want certification? So the third option. NYU for the last few years has been offering certificate versions of my corporate finance, valuation, and investment philosophies classes. What does this mean? If you log into NYU's Exec Ed website, you decide to join the classes, you will be given essentially a certificate class with a calendar. The sessions will roll out over 15 weeks, and you will be required to watch the classes, take an exam, and you will get a certificate. You're saying, what's the downside? The downside, it's offered by NYU. I don't have the bandwidth to provide certification. NYU does, and they will charge you a price. Now you can go check the prices out. Do you get sticker shock? It's not fair picking on me because I do offer a free online version of pretty much the same class. For those of you who do need a certification and you need also the discipline of having a time-constrained class, the certificate classes might work for you. So again, let me summarize. For my corporate finance and valuation classes, you have all 3 choices. You can take my regular class, which is 80-minute sessions, 2 80-minute sessions a week for 15 weeks. Take the test exams, but you get no credit, no certification. You can take a free online version of the class, much shorter sessions on your own time. Again, free, but no certification. Or a certificate class where you pay NYU, whatever they charge you for essentially the same content as my online classes. Now, in terms of sequencing class, if you're saying, what do I start with? I don't know whether this flowchart helps or hurts, but it kind of lays out the sequence for taking the classes. It starts with the prep classes as to whether you should take them. And then it asks you what area of finance you're interested in. If you're interested in running your own business, all you need is the corporate finance class. If you're interested in valuing companies, I think it makes sense to take the corporate finance class first and then valuation. If you're interested in investing, then you might take the valuation class followed by investment philosophies. But you can pick the sequence that makes the most sense for you. Or you can pick just one course and do it on your own time. Now, in terms of supporting material, I try to provide you almost everything I would provide students in my classroom, starting with the lecture notes that I use in my class. Now, those lecture notes are available as packets if you go to my regular classes, but every session will have the slides that go with that session. And there's a post-class test that I offer for almost every session, where at the end of the session, you can take the post-class test. It'll take you about 12 to 15 minutes. But what the post-class test does is it tests you on the material we covered during the session. Now, during the course of these sessions, I draw on data. I believe in data. I don't worship it. And if you're interested in the updated versions of the data, you will find them on my website. And in fact, I update the data once every year at the start of the year. And my next update will be at the start of 2023. I never open an Excel spreadsheet in my classes. I don't believe that I can turn out Excel ninjas, so that's my job. But I do find spreadsheets useful as tools, and I have built spreadsheets that you can use in valuation. So to basically save you the trouble. There's nothing magical about the spreadsheets, but you're welcome to access my spreadsheet. I do have YouTube videos where I take the applied part of the class and I try to make it really applied, starting with how do you read a 10K? What does a beta regression tell you? Essentially, it takes those applied parts of the class and takes you through an actual company and how you can use that company's data to do the application. Now, I do have a blog where I don't write that often, but I write almost entirely about corporate finance, valuation, and investment philosophy. And if you're interested, you're welcome to see, read whatever I post on the blog. Now, one of the questions you might have is, do I need a book? You don't. In fact, I don't require any of my own books in my own classes. Why? Because some of them are obscenely overpriced. I wouldn't buy my own book. But if you're interested, I do have books on each of the different topics that I teach. For valuation, I have 5 books. The Modern Valuation, which is my very first book. Investment Valuation, which is the only one of the 5 that it's designed to be a textbook. The Dark Side of Valuation, about valuing difficult to value companies. The Little Book of Valuation, if you don't have much time for reading. And Narrative and Numbers, about telling stories and converting them into valuation. If you're interested, if you're going to go on my site, you'll see a comparison of these books and which one you might need. But as I said, you don't need any of these books if you take my valuation class. For my corporate finance class, the Applied Corporate Finance book is actually the book that is actually most closely tied to the class. But I have 2 other books in corporate finance. One is a very old version of a corporate finance book that I haven't done a new edition in almost 20 years. It's called Corporate Finance. And the other is a book on strategic risk-taking. I don't like the word strategic, but I did use it in this title about how risk management is not just about avoiding risk or reducing risk. It's about seeking out and taking the right kinds of risk. For my investment philosophies class, I have a book that's actually called Investment Philosophies that's more suited to the class. But I also have a book called Investment Fables, about the tales we're told about how easily we can make money. All of them are lies, but I look at these as fables. There's a new book that I just finished a couple of months ago called The Corporate Life Cycle. It's in the process of being edited, and it should be available sometime in 2023. I'll write more about it when it becomes accessible. But you don't, as I said, don't feel this as a sales pitch for any of these books. You don't need any of them. You're fine with the lecture notes and the material that you will find online. Now, we know that a lot of people start on online classes, but they don't finish them. In fact, the statistic, I think, with the MOOCs, remember those? 20 years ago, that was supposed to be the next big thing, and they never quite caught on. Only about 5% to 10% of people who started MOOCs complete them. One reason, of course, is you start with the best of intentions, but then you run out of time and you just drop out. It's easy to drop out. But there's another reason, and that is a big part of learning comes from not just listening to lectures, but asking questions in class, discussing things with classmates, having a group that you can work with. And that's been lacking online. And I was very excited when a few weeks ago, Sebastian Marambio, who's created this site called We Are Six, came to me and he said, would you like us to set up our site for your classes? And as I work with them, I've discovered that I think this could fill the gap. It's a site you can go to, and you can pick, as I said, for corporate finance, valuation, investment philosophies, whichever class you're interested in. You can go in, and it's got apps for the Android and as well as for Apple devices. You can enter the class code, pick the class you're going to take, find a group. And in finding the group, you can actually tailor it to how much time you plan to take the class over. So if you plan to take the class over 6 months, you can find a group that's planning to take the class over 6 months. If you think it'll take you a year and a half to take the class because you have time constraints, and you can find a group that wants to stretch it out over a longer period. But the end game is you're going to create a group, and you can work as a group, and you can bounce questions off that group. You can work on the project that's very much a part of the class as a group. Now, obviously, I don't have the bandwidth to step in and grade your projects, but having a group can allow you to not just get questions answered, but to explain concepts to the rest of the group. A big part of learning comes from taking something that you've understood and explaining to other people. So it's an experiment. I hope it goes well. And I hope to see you in my classes. So I hope we found this session useful, and I look forward to seeing you in my classes. Take care.